The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. I just want to say thank you for taking some time out of your day today to come join myself and Jared Anderson on a webinar. I do have Jared with Market Synergy Group. He's going to be going through some of the proprietary products that IAMS does have available. So we're going to be letting him take over here in a few minutes. But first, I'm just going to go through a few intro slides, kind of let you know, through those of you who are not familiar with IAMS, some of the basic things here, some of the programs we've got available, some of the stuff you've got right at your fingertips, give you a few things real quick, and then we'll hand the time over to Jared. For those who don't know, my name is Laura Johnson. I work here at IAMS in the Annuity department, so I work on the marketing side, do a lot of the case design, just help you get your business, figure out what product's going to be best for your client. So anytime you're working on any annuity cases or need anything, feel free to give me a call. We're just go ahead and get started. We're going to talk about some of IAMS business builders. You know, we've got several different programs available for you when you come on board with IAMS. I'm actually going to skip this slide and we'll come back to it. The first thing that's available when you join IAMS is our new producer bonus. So when you do get contracted with IAMS, you've got 6 months to qualify for this bonus. As you can see, there's 3 different tiers, $100,000, $300,000, and $500,000 level. So, as you can see, if you do a $100,000 case in your first 6 months, you can get $750 cash. You can have us build you a website for 2 years and pay for it, or get the most recent generation of an iPad. If you choose not to cash out at the 100, you can go to the $300,000 or $500,000 level, and as you can see, there's lots of different options there as well. Once you do cash out your new producer bonus, then we've got a couple other things that are available to you. So once you do cash out your new producer bonus, all premium thereafter will count for marketing reimbursement. So for every $100,000 of annuity production you do, we're going to put $100 in a marketing account for you, reimbursement account. For every $100,000 of single premium life you do, we'll get you $200 of marketing dollars, and for every $10,000 of life target premium, we'll also get you $200. So great way for you to build up marketing dollars and let IAMS partner with you on some of those marketing expenses. One other thing that's always available to all of our agents is our referred producer program. As you know, your business is built on referrals, and that is how our business is built as well. So what happens with this program is when you refer an agent, enjoy the services of IAMS, refer them over to us. When they do get contracted with us, we're going to give you $50. When they write their first piece of business, we're going to give you $100 or give you 20 basis points on the business they wrote. So good way for you to just earn some extra dollars off of just referring someone without having to take on the responsibility of having a downline agent. If you ever want to know, by the way, what your marketing reimbursement account's at, or if you're eligible for the new producer bonus, just give your marketer at IAMS a call. They'll be able to help you out. If you're not familiar with our creative department here at IAMS, it's a department you should become very familiar with. Jacob and Sean and Aaron do a great work over there for our agents, anywhere from, you're new to the business and you need help designing a logo and getting business cards, doing some of the initial branding, and then usually I suggest we start there. Once we have that in place, then how do we want to market? What are you looking to market, and how do you want to go about it? And then Jacob and his team can help with whether it be a handout or a newsletter. Maybe you're looking to do some email marketing. Maybe you're trying to tap into the social media marketing. Those are all things that the creative department can help you with. When you are contracted with IAMS, you have access to this department. Depending on the service and how much time it's going to take for our designers to do it, there could be a little cost, or you can use your marketing reimbursement to pay for that as well. So if you need to bounce some ideas off of anyone, again, Jacob is the head of that department. You got Sean and Aaron over there as well, who all do great work for you all. If you haven't been out to our website, as you can see here on the screen, it's www.imsinc.com. A lot of great things out there available on the website, anywhere from, I use it all the time for running quotes, doing income comparisons. You need term quotes, universal life quotes. If you need some forms. One of my favorite things out there, though, is our sales resource library. If you go under the support tab, you can click on sales resource library. Out there, you're going to find a whole array of different client-facing presentations. If you need a financial calculator, or maybe you need to do a needs analysis with a client. Maybe they're trying to put together an estate plan. Well, we've got fact finders for that. There's a whole bunch of different materials just right at your fingertips. So if you haven't checked out the Sales Resource Library, I really encourage you to do so. If you have trouble navigating anywhere on the website, feel free to give me a call. I'd be happy to walk you through kind of where to find things. A couple of years ago when the DOL was going on, Steve and Charles decided it was time that we enter the security side of the business. So we do have an RIA in this office. I will say that our RIA was built to accommodate the insurance producer. You know, when the DOL was happening, it was forcing a lot of people to possibly have to become securities licensed to be able to even sell a fixed index annuity. And at that point, we decided it was time to be able to have this in-house and be able to service our agents in all aspects of the business. So really for the insurance producer, I always talk to my guys as they're looking at if this is something they want to do. A lot of times we go into a house of a client and we've got $500,000 and maybe AIG will only take $350,000 of it. What are you going to do with that other $150,000? Are you going to leave it on the table for them to go to their other financial advisor? You know, this is a great option. Having your Series 65, being a CFP, those are ways you can be registered with IAMS. Wealth management. One other thing I will also mention is we do have a soliciting option with wealth management. If you don't have your 65 or maybe you're studying for your exam, depending on your state, we are allowed to sign you out, have you be a solicitor for IAMS Wealth Management. Pretty much just referring that client over to IAMS Wealth Management is what you would do. And then depending on your state, we're allowed to pay you a portion of the fee that we charge the client. So it's a good way for you to kind of start building some of those clients on the security side. And then when you do get your 65, we would transfer all those clients directly over to you. So it's just a good way. When you're in that house, you want to be able to be able to be in control of the whole situation and know that you've taken care of your client on all aspects and left nothing on the table for another agent to come in and get. We are going to have a couple poll questions. I forgot to mention this at the beginning. The first one's going to go up right now. If you are interested in either IAMS Wealth Management and just kind of their platform or maybe the soliciting program, answer yes to the question. That'll just generate a call from Mike Hansen in our office. He'll reach out to you, give you a little information, answer whatever questions you have, let you know if your state's one of those that we can send up a soliciting agreement in. So if you guys could answer that question real quick, we'll move on to our next slide. All right, we're going to close that down. Next thing I'm going to talk about is our Life and Annuity Academy. IAMS has been doing these for as long as I can remember, probably 10, 15 years. What these are 2.5-day trainings. What we do is we fly in 30 to 40 producers with IAMS and bring in and for 2.5 days of training. A lot of times we'll co-sponsor this with one of the other home offices, but we usually do about 4 of them a year, and it's really not geared so much for product as much as it is sales concept, techniques, ideas. The goal here is how can we help you grow your business? What tools can we put in your hands? What niche products, what sales ideas, what marketing things can we help you with to help you grow your business? How can we take you from being $500,000 annuity producer to being a couple $1 million annuity producer is really what the focus is. We do bring in several of our top producers as well. They're going to share with you kind of what they did to get to the top. And some things that they've had success doing as well. So it's really a great opportunity. It is all expense paid. We do cover the flights, we cover the meals, we cover the hotels. The only requirement is we do require you are contracted with IAMS. And I will also let you know that depending on if you've written business or not, those who have written business are going to get priority over those who have not written any business with IAMS. So, we do these, like I said, 4 times a year. So if it is something you're interested in, I'll throw up the second poll question. What this will do is it'll generate an email out to you with a registration link. This is a pre-registration link. This does not guarantee you a spot at the Academy. But what that does is let me know that you are interested, and I can follow up with you in regards to that. We can talk a little bit more about some of the topics that'll be covered, see if this is something that would truly be a good fit for you. I know the one we've got coming up here in Dallas, just about 3 weeks is already filled up, but I do know that the next one will be held in May. And we're pretty certain on the destination, but we should have that here in the next week or two. So, If you haven't answered that question, if you could do that so we can get on to the rest of the topic this evening. Alrighty. And the last thing I've got to share before we hand it over to Jared is our Ritz-Carlton travel, or our Top Producers Escape. This is coming up here this year in August 25th through the 29th. It is our 2019 Marketing Summit. We're going to be down in Naples, Florida at the Ritz-Carlton. As you can see here, qualification on the screen. This will qualify you and a guest. All expense paid. Again, meals, flights, hotels, everything included. Spa, there's golf, really a great time for IAMS to be able to say thank you for the business you've written with us, and just really give back to you. So as you can see, qualification did start last January and it runs through June of this year. So we've got plenty of time still to qualify. I know they did just send out the most recent trip credits as far as where you stand, so be watching your mailbox. You should be receiving those soon. Anytime you have a question about where you stand as far as the credits go, give your marketer at IAMS, give anyone here at IAMS a call. They'll be able to help you out with that. And with that, I'm going to switch the screen on over to Jared, and we'll give him the rest of the time.
Okay, Laura, can you hear me?
I can.
All right, let me make sure I do this correctly and get the right screen on. Okay. Are you seeing the correct screen?
Yeah, I see your first screen. You might just want to blow it up.
Well, okay. Sorry. I'll get this fixed here because I have two screens in front of me, and unfortunately it's showing the wrong one, and I don't remember exactly how to do that. Is that better?
There we go. We're going.
Perfect. All right. Well, again, thank you, Laura, and thank you for all of you that are on the line this morning. As Laura mentioned, Jared Anderson from Market Synergy Group. I'm going to take the next 30, 40 minutes or so to really give you a quick overview of the product offerings that we have here at Market Synergy Group. Laura mentioned, we've been working with the IAMS organization, for me, going back a previous life for almost 15 years now, and have a great deal of respect and certainly know Steve and Charles and the rest of the team very well. So I want to thank you for your time. I know you guys all have busy schedules, but like I said, if we can give you a couple ideas in regards to the product offerings that we provide exclusively to IAMS and a few other organizations, we think we can get somewhere. So on the screen right now, what you're going to see is the three companies that we are currently representing on the fixed annuity side: Lincoln Financial Group, AIG, American General, and Colorado Bankers Life. So the idea behind what Market Synergy Group does is we design and distribute products that is going to give you the opportunity to get in front of more clients, see more people, and have an exclusive opportunity to do so. Oftentimes what we found is we really limit the amount of individuals that are contracted with these specific carriers for this specific product line. So it puts us at a pretty big competitive advantage in the area in which you are doing business. But as you can see there from the chart, things as simple as safe growth all the way up to income for life. What our thought process is and our business plan is how can we maximize the amount of opportunities that you have from a product standpoint, and how can we make them all different? So we'll go through some of that here over the next few minutes. First, what we'll cover is the AIG solutions, the Power Select series, and again, got different offerings for different scenarios, because we feel as if anytime you're in front of a client, there's going to certainly be different needs. So with the Power Select series, we have three different options. The Power Select Builder, which is a simple, safe accumulation product on a 10-year chassis for those individuals who are looking to set aside some of their assets and have the ability to see them grow with the protection of the downside risk. Most recently, we just launched our Power Select Builder 8, which is a shorter-term product, again, for safe accumulation, has some different crediting options and a bonus on there as well, to draw some attention to some of those specific clients that you're meeting with that maybe have a shorter time horizon with their money and want to potentially see some growth opportunities there as well. In addition, through the AIG line, we have our Power Select Plus Income, which is slowly becoming I shouldn't say slowly, it's quickly becoming one of our better selling products because of the different chassis that we have available, both performance-based and guaranteed income, and we'll go through those solutions here as well. So first and foremost, I want to talk to you briefly about the crediting options that are available within all product lines from AIG. I mean, obviously, this is important. This is what drives the returns. This is what gets the clients excited. This is what helps you understand what can potentially give them the returns that they're looking for. The first one we'll discuss briefly is the PIMCO Global Optima Index. This one is about 1.5 years old. Laura was actually out when we did our first training in California to get a better understanding of this. The way we look at this one here at Market Synergy Group is, excuse me, this is really higher on the equity side, so it gives you the opportunity for those higher growth numbers that you're looking for with the protection of the downside risk. As you can see on the screen, really what the PIMCO Global Optima is a portfolio of different equity options that's managed on a daily basis in and out of treasuries, as well as cash. It can be allocated 100% into equities, or it can be allocated 0% into equities, depending on the current volatility associated with the market. So this is what we oftentimes refer to as our home run type of a strategy. You know, the volatility management is up to 7.5%, which simply means that it's going to have a higher focus on the equity side of the allocations within this index. And for more information, I would ask that you contact your marketer at IAMS. They've got a lot of great information and marketing pieces on it, but I just briefly wanted to cover it. So different diversification within the product portfolio is key to us, and we'll have a couple slides where we think it makes the most sense from an allocation standpoint here in a few minutes. In addition to the PIMCO, we also have the MLSB, or the Merrill Lynch Strategic Balance Index. This one's a little bit designed a little bit more for consistent returns, if you will. This is a simple and easy strategy for you and your clients to understand. It's S&P 500 without dividends, as well as Merrill Lynch 10-year Treasury futures. So a portion goes into the equity side of the S&P, a portion into the fixed income, and it's managed on a daily basis in and out of cash, and it targets a 6% volatility control level. So again, this one is designed for your singles and doubles, if you will, for a baseball analogy. Going back to the PIMCO, what we oftentimes find is that's kind of the home run strategy, but to be fair, there's going to be some years in which you're going to strike out a little bit. So a good combination of both is what we found to be the most credible in regards to how we position this product. What we have up on the screen here is an illustration using the 10-year builder product for simple, safe accumulation. One of the things that we've pushed real hard from Market Synergy Group is how can we have something out there that's simple, safe accumulation and really just kind of match some of the income riders that are available. In the top right screen, you'll see that we've allocated, 25% into the S&P PAR strategy, 25% into MLSB, and then 25% into PIMCO. I'll go over again here in a minute the optimal allocation strategies that we use. But our theory here and what we're showing you is simply taking this product and maximizing your free withdrawal scenarios in order to match any income rider that's out there in the industry today. As you can see, it's taking $1 million in premium for a 65-year-old. As we focus on this withdrawal amount here, what we did is we matched the highest guaranteed income rider in the industry and said, okay, that's going to be around 65 grand on $1 million case. So what if we just took those free withdrawals as opposed to putting them into some sort of an income rider? Because that client doesn't necessarily know if they need income, but they certainly want to know that that capability is there. What does that look like over the term of the contract? As you can see at the bottom here, if we go out 30 years to age 95, clients taking out almost $2 million in income, they still have a remaining account balance of 1.8. So again, oftentimes what we've found is you all are sitting there meeting with clients and come across an individual who may or may not need income, but they certainly know that they want to have the protection of the downside risk. This is a great income solution with no fee associated in order to accomplish the same thing that an income rider could. Okay, in addition to that, I mentioned earlier that we recently added the Power Select Builder 8, a shorter term product for the similar type of a situation. It does have a 4% premium bonus in most states. It is approved in 49 states. There are a few that make it a 3% bonus. It does have S&P, PIMCO, and MLSB strategies as well. Currently with a 46% par on the S&P 500, and we've created a piece to show you a little bit about how getting that head start can make such a big difference in regards to that bonus. This product does have 5% free withdrawal starting after year one as well. So again, focusing on the different crediting options that we have available, from an equity exposure, the S&P 500 is going to be the highest with our annual point-to-point caps. as well as our participation rates. And then we have PIMCO in both of those scenarios as well, with caps as well as par rates. Annual point-to-point with spread as well as a par rate. Same thing with the MLSB, and then certainly a fixed account in there as well. Quick snapshot of the rates and then the pieces that we've created from a marketing standpoint for you to understand the differences between the crediting options available within the products that we have out there today. So all of this is accessible through your marketer at IAMS, and Laura can certainly get you the necessary information in order to have a better understanding of it. So here's what we did for illustration purposes as well. As you'll notice in the top right, again, we're never allocating 100% allocations into our highest illustrated rate, which happens to be the PIMCO strategy, because quite frankly, we don't think that that makes sense. But what we're showing you here is just a quick example of what a 25-25-50 allocation into the builder rate would look like for a 65-year-old that's deferring, or excuse me, that's just looking for simple, safe accumulation. Up there on the screen, Laura again has the capability of running all these illustrations for you, but we're really looking at the overall picture, what we can do in addition to that with the jump start of that 4% premium bonus. Here's a piece that we created that talks about the S&P par and what I mentioned earlier in regards to jump starting with that 4% premium bonus. What we've done is we've taken 3 8-year terms going back over the last 24 years and compared to you. And there's a lot of 50% S&P pars out there in today's market, but we wanted to take a look and see what it looked like, what it would look like historically if we had a premium enhancement to really start above that number in the very beginning. So we simply took $100,000, okay? And as I mentioned, 3 different 8-year terms, and up on the screen what you'll see is what the S&P par strategy would have to be in order to match the 46% with that 4% premium enhancement. And then the highest, which happens to be in the middle years in 2004 through 2011, you can see that with that 4% premium enhancement, if you had a 52% par strategy, the premium enhancement is still going to beat it from an accumulation standpoint. And that's including quite a few zeros and some certainly lower years on the S&P 500. So again, this piece is available through any of your marketers at IAMS. So improving reset results by diversifying strategy allocation. This is what I was talking about earlier. One of the things that we spend a lot of our time with here at Market Synergy Group is how can we maximize your understanding of our products. In addition to that, if we analyze combinations that offer potentially the best results over historical averages, what does that look like, right? In addition to that, we have 2-year crediting options, which we think are very, very strong from a client perspective, because it gives you the opportunity to get better caps and rates. However, we also understand that as you're doing annual reviews, you want to have conversations to talk to them about how did my annuity perform? What was my index credit? Tell me a little bit about market conditions and where we are in regards to what we started with. So we took tens of hundreds of illustrations and came up with what we refer to as the optimal allocation. Okay, you can see there in the blown up box on the screen. For the Builder 8 product, the optimal allocation is a quarter of it into the S&P 500 1-year participation, a quarter into the MLSB 2-year, and then half of it into the PIMCO 1-year with the spread. So what happens in that scenario? Okay, we're looking at 30 different years of data, and in that 30-year time frame, we have 2 years in which we receive a 0. The average annual return in that specific time frame historically has been just over 7%. So what we're trying to accomplish with this optimal allocation is how can we get a credit every single year by diversifying within the indexing options that we have available within the product portfolio. And why do we do this? Because to us, these indexes are designed to perform in different markets. So we're not trying to maximize the illustrated number, we're trying to maximize the number of returns and hopefully get a portion of it into an index that's going to return every single year. So your conversation becomes easier and you have the ability to have some of your money working in whatever market conditions that we run into. The Builder 10 optimal allocation is a little bit different. It actually turns out that if we look at all of the different scenarios that we can, the best optimal allocation in this specific product would be all in the 2-year strategy. Now, understanding that we're not getting a credit every single year because it is in the 2-year strategy, but because the different indexes work in different market conditions, you can see from a 30-year time frame, there's not one year or not one crediting year in which you're going to have a conversation about getting a 0, at least historically. 735 annualized average, again, that's not our highest illustrated rate, which, you know, unfortunately, it's kind of gotten to that point in our industry today where a lot of times we're looking for the highest illustrated rate, and that's not how we operate. We feel like if you diversify within the product with the index options that are available, it makes a lot more sense. So you can see that this would be fun conversations to have over a long time with that specific client if we're having the ability to say every single time we're seeing some sort of a credit on the positive side, and we also have that protection of the downside risk. So that wraps up our safe accumulation conversation around the builder and the builder A. What we're going to do now is go into our lifetime income plus and lifetime income plus multiplier on the Power Select plus income. As I mentioned earlier, through all of 2019 and certainly through the end of 2018, this has been our most popular product. Understanding that a lot of you on the line here today are doing income planning, having conversations around retirement income and how can we accomplish that. So back to what I was saying earlier, our thought process and our idea behind designing products is how can we maximize the amount of options that your client has and that you have as an agent or an advisor in order to fit the needs that they're looking for. First, what we'll do is talk about payout factors. One of the unique features that we have in both our guarantee and performance-based income rider is there's no change to the payout factors, whether it's the guarantee version or the performance-based, and it's a simple 50 basis point reduction to payout factors for joint income. What we found is a lot of you all are doing planning around joint income and certainly trying to maximize the amount of income you can receive for the life of both of your, husband and wife in a lot of situations. So what we focus on in our design is truly the end number, right? Not a high roll up, although we're extremely competitive right now, not any bonuses that will kind of muddy the waters of the payout, but what can we get from an income standpoint, both on a guaranteed side and a performance-based side. So we maximize the payout factors in order to get that end number, which is certainly the most important. Currently on our guaranteed income rider, we have 9.5% simple interest roll-up for the first 10 years of the contract, which is extremely competitive. It's simply that. I mean, this is obviously a spreadsheet game. You all are going to call Laura at somebody at IAMS and say, here's my situation. I have a 65-year-old that's deferring for 3 years and wants to turn on income. What's the highest guarantee? I'm sure you've all made that phone call with client appointments at your meeting. And what I'm telling you is that we're going to pop up in a lot of those scenarios going forward. So what we've done in the bottom left, you can see the companies that we're comparing to, but we've created a heat map. Again, what we do at Market Synergy Group is a lot of research around competitors and where we can compete and where our product fits best. So you can see all the ones up there, and this is on a single scenario. So our idea is around these retirement ages, as you can see, of 62, if we're deferring to get to 66, which would be full retirement age, to do some sort of planning around Social Security, whatever the case may be, you can see there's a lot of ones for us in there. And then when it's twos, we're not losing by very much. But what we also like to do here at Market Synergy Group is make sure we point out to you where we're most competitive. In this scenario, all the ones there on a single is where we are winning the guaranteed income game. As I mentioned earlier, though, if we go to the next slide, it was important for us to focus on joint income as well. You can see that the ones jump up substantially higher because oftentimes what you'll find is if you select joint income with a lot of the carriers and a lot of the competition that we see out there, there's a 60, 70, 80 basis point reduction to that joint payout. Ours is simply 50, therefore puts us in a better position in a lot of these scenarios, and we're winning that guaranteed income game. Now, the disclaimer I'll throw out is not every single carrier is down here, but these are hands down, without question, the most popular ones when we look at guaranteed income and the ones that we compete against the most and that we see on a quarterly basis are selling the most in products, whether that be because of the rating of the carriers, whatever the case may be, other features that are involved. So again, quick snapshots. The key here, what I'm trying to accomplish is to give you enough information to feel comfortable about having the conversation and then ultimately making a contact back to your individual marketer at IAMS to get a better understanding of this product and what it offers. So as we move on to the next phase of the AIG product line, the Lifetime Income Plus Multiplier is really what's driven a lot of our business in the fourth quarter of 18 and this year as well. So how does this work? It's different. It's not a guarantee. It's a performance-based income rider. Oftentimes, the line I like to use is, we sell index annuities for the upside potential with the downside risk. Why are we not applying that to our income riders as well? Certainly there's situations in which the client knows that they need a guarantee. That 9.5% simple comes into play a lot there, but there's certainly a place for this specific product as well. So this slide talks about our double and match. So it's pretty simple how it works. We get a multiplier during the deferral stage, and then we get what we often refer to as a paycheck increase during the payout phase. So an example of that, if you're in deferral, your client's in deferral, and they get a 5% credit to their annuity contract, because they're in the deferral stage, they get 2 times that, or a 10% credit to their income base. Once they turn on income, the next slide will show you, a 5% interest credit means that they'll get a 5% raise to their income. The easiest way to explain this, if the client's receiving $10,000 and they get a 5% credit to their account value, to their annuity contract, that income now jumps up to $10,500, is locked in, and is guaranteed for life. So again, extremely competitive, and where this is most competitive is in early income scenarios, and that's by design from Market Synergy Group. What I have up on the slide now is, going back a few stages, you do have the ability to turn on both of these income riders within 30 days of issue, which makes it extremely competitive as well. As I mentioned in the very beginning, though, there's no change to the payout factor. So for those early income scenarios, you can either turn on the guarantee, or you can turn on the performance base and get a paycheck increase based on crediting options you've elected for your clients. And again, to be blunt and to be honest with you, where we fit, the further you go out, the more you lose in guarantee. So this is truly a great design for those individuals that walk into your office and say, Mr. or Mrs. Agent, I've recently retired. I need to start taking income. How can you help me? As you can see here, 65-year-old taking income immediately. We've done the research and found the highest guaranteed income in the industry. Where it sits today, the Allianz 360 to age 85 will pay you $114,000 guaranteed. Our guarantee is simply $9,000 less than that with the multiplier. If we look at the worst case scenario for the S&P 500 strategies that we have available, we're still outperforming that by about $12,000, and the most recent is at $188,000. So again, solutions for those early income, allowing your clients to keep up with equity inflation, is what this product was specifically designed for. So here's a quick illustration to again help you understand what that looks like. As you'll notice in the top right, again, we never allocate 100% into one specific crediting strategy because we think it makes sense for the optimal allocation that we talked about earlier. But you can see $1 million for a 65-year-old taking income immediately, starting at $52,500. You know, going back one slide, as we look at this, I think that number is around $57,000 that we know will always be guaranteed for life. From an illustration standpoint, you can see that our number starts at $52,500. We're keeping up with equity inflation until the account value equals 0, and that number is growing to $119,584. Again, the idea is these years right here, through the early stages of retirement, the client has the ability to keep up with inflation as their retirement changes need. They get to a point where they max out at $119,000, and that number is guaranteed for life. So as you can imagine, really, really competitive. In addition to that, one of the things that we oftentimes talk to agents who really like this product is, let's go to the unfavorable page, because we think that's an important opportunity to put in front of your client as well. We like to focus on the S&P 500 for explanation purposes in regards to how this income rider works and why it makes sense over a guaranteed rider. Using the same numbers, $1 million starting at age 65. If we take the S&P 500 index returns from 1998 to 2008, that includes 1, 2, 3 double-digit negatives, 4 double-digit negatives, and a negative 1% annualized return. Because of the way this income rider works, we still start at $52,500 and grow to $68,326. If we go back to that slide 2 ago, $5,700 is the highest guarantee, or $57,000 is the highest guaranteed number that you can get in the industry. So I oftentimes ask agents, marketers, anyone I'm having a conversation with, if they're looking for immediate income, or even in the first couple of years, and you're a firm believer in the FIA and the ability to see growth, why would we not choose this solution? Additional marketing pieces that we have available on the double and match. Laura has access to all of these, but we have a tremendous amount of marketing pieces that are client friendly, that you have the ability to reach out to IAMS and get in front of your clients to start having this conversation about an A+ rated carrier with extremely competitive income options. There's more pieces here that I'll briefly show you, and like I said, Laura has access to all of these. Okay, Laura, moving on to Lincoln. And again, for those of you that are on the line, I would ask that if you do have questions, please contact your marketer at IAMS. Laura knows exactly how to get a hold of me. I'd be happy to have one-off conversations with you to give you a better understanding of the product portfolio that we have available. Lincoln Retirement Safeguard. This is a recent product that we launched through Lincoln Financial Group that's starting to gain a ton of traction as well. I mean, again, this is going to be different than what we just talked about with the AIG product line because, as I mentioned earlier, we're trying to design products that give you different options in different scenarios that your clients bring to you. So really, this product was designed for 4 uses with one asset. Okay, so you have accumulation opportunity, you have income for life, you have confinement benefits, you have enhanced death benefits. There's all sorts of different options that allows you as the advisor to have a conversation with that client and come up with a solution that makes sense for them, and then do it through Lincoln Financial Group, an A+ rated carrier with extremely well name recognition. Just a couple quick pieces on the specifics around the Lincoln Retirement Safeguard and the product summary. 20,000 minimum, 2 million, up to 2 million without home office approval, issues from ages 50 to 80. There are different crediting options that we'll touch on briefly, and the income rider does have to have a 10-year deferral. So there's 2 different options, as I mentioned earlier. What we're trying to accomplish with this design is if you sit down with a client and they give you their story, what they're looking for, how can we walk them down the line to give them a product that makes sense for their specific situation. So the standard version, which has no fee associated with it, gives them a 15% income-based bonus day 1. During the 10 years of deferral, okay, they have a 150% multiplier. So anytime there's a credit, they get 150% of that to go to the income base. In addition to that, after 10 years, the worst $100,000 can be at is $150,000. So really, if you look at it, we have a 5% simple interest roll-up on this income rider that still has the ability to grow based on the crediting options you select for that client. Now, if we know we have a client who is looking at an income solution 10 years from now, and they're willing to pay a rider fee, that number for multiplier jumps up to 175, and the guarantee is essentially 7.5% simple interest growth for the first 10 years of the contract, which is extremely, extremely competitive. The crediting options that are available are really unique in what we've offered through Lincoln and with the Retirement Safeguard. There's a 2-year point-to-point spread option with BlackRock, which is the largest money manager in the world. And what we've done in our design is we've got a little bit different. For these cases over $100,000, and bear with me on this one for just a second, instead of juicing up the crediting option more than 100% of participation, what we actually have is what's considered an index credit bonus. So anytime that you are positive in that index, you get an additional 1% added to your crediting option, which is very unique and different. Our idea behind this is how can we maximize what a fixed index annuity is really supposed to do, and that's between 3 and 5 and 4 to 6% on any given year. How can we get those types of numbers and then still add 1% in any years that it's positive? We also have an S&P vol control as well as an S&P participation strategy on there and a 1-year point-to-point. But ultimately, what the idea is how can we maximize the income? How can we have an accumulation bucket? How can we also have something that has long-term care benefits into it as well? So as I mentioned earlier, 1 bucket of money, 4 different uses. You can see on the screen here all of the different options that we offer through the Lincoln Retirement Safeguard. The first one we'll do is focus on accumulation and what we find as being the most popular or most sold products in the industry today. Moving on to the next slide, you can see we're highlighted here the Lincoln Retirement Safeguard using the highest illustrated rate, which is the S&P 500 daily risk control. Illustrated rate is only at 4.83%, so nothing crazy, but accumulation after 10 years, you can see, interestingly enough, the only product that's actually beating it is our 8-year builder as well as our 10-year builder product. But what this product offers you is the ability to have an enhanced death benefit in this specific situation of $382,000 that can be paid out to the beneficiary over a 5-year time frame. You can see the other products that have death benefit, enhanced death benefits in this specific scenario as well. What I always like to focus on again, though, is the optimal allocation with blended S&P as well as the S&P PAR and the BlackRock strategy. But again, the numbers are very telling, very competitive, gives you kind of that Swiss Army knife, if you will, and has the ability to have all different uses for the specific asset that the client has trusted you with. So if we look at it from an increasing income standpoint, no fee version, some of the best-selling products in the industry today are listed there, so I want to show you where we stack up. Number 2 is below us here, so what you'll see is a 55-year-old deferring for 10 years. Our initial income illustrated is going to be $17,990. Our guarantee is also higher because of that 150% that we're able to offer, and our cumulative income to age 85 is $359. That results in a 31% difference in income to the highest, to the second highest in the industry in the North American Prime Path 12. A 55-year-old deferring for 10 using the increasing income option, which gives you the ability to see a paycheck increase, you'll see that our number here is at $398,749 cumulative. Our guarantee is $6,150. So the Athene agility is a little bit higher on the guarantee, and certainly higher if we allocate 100% into the Janus index. Doesn't necessarily start higher, but the accumulation number does get higher. So what we've done is compare 2 different strategies that are S&P focused, right? The Athene version of the S&P and our Lincoln Financial Group version of the S&P 500. And with that specific one, we're actually 71% higher. So again, a firm believer that diversification within the product and not focusing necessarily on the highest illustration makes the most sense. So level and increasing income with the fee version for those individuals that we talked about that are willing to pay for the income rider and know that they have an income plan in place. All right, what we compare ourselves to there is the nationwide new heights using the Zebra index illustrating at 765, whereas ours is at 483. But again, cumulatively, you can see that our numbers are 431,840, which results in 26% difference in the income solution to age 85. Increasing income with the fee, so we want to start but also see the paycheck increase. Our multiplier is certainly, designed for that as well, but what we focused on with the Lincoln Financial Group product is how can we get a higher guaranteed income to really close that gap, if you will. And if we take out that and look at the second option here, we're 24% higher than number 2 in that specific scenario. We're illustrating at 4.83% compared to 8.13, and that's because of the design of the income rider and the features that are available with it in any given scenario. So a lot of times we also hear about individuals who are looking for simple withdrawal solutions, right? Let's take out 10% for the first 10 years and then kick on the income rider. So we've created that solution as well. Initial income after withdrawal starts. In this specific scenario, we are the highest. Income to age 85, as you can see, we're the highest there. And then the accumulation value that's still remaining in this specific scenario, we're the highest as well. And this is including 3 of the top selling products in the industry. 27% higher in income by utilizing free withdrawals and then kicking on the income at the end of the term. All right, Laura, that was quick. I want to briefly talk about our Lead the Way program that we've just recently launched that applies specifically to you individuals that are on the line today. Lincoln Financial Group is our newest product. AIG we've been doing for about 4.5 years now. But Market Synergy Group is kind of wanting to put our money where our mouth is here, and we've decided to run a promotion through the first part of the year. So any business that you write with Market Synergy Group, whether it be AIG or the Lincoln Financial Group, you have the ability to earn up to $1,000 per million towards your marketing dollars. And essentially what that means is we want to put money back into your pocket from a lead generation standpoint. So if you do seminars, if you do radio, if you do TV ads, if you do any sort of lead generation that you're sending out, we are willing to help you with that business because we understand that it's important for you to get in front of more clients. So I would ask that you contact Laura or any of the guys at IAMS to go through this program. We also have a jump start. If you haven't written any business with us in the last year, your first qualification number actually starts at $500,000 in premium. We'll put $1,000 towards your next lead generation program that you're looking to do to get yourself in front of more clients. So we're obviously pretty excited about that. That's something that's going to run through the first half of the year, and we've started to get a ton of traction around that. So please take advantage of that. We understand that you're not, getting in front of more clients for free, and we want to help you with that specific solution. So that being said, Laura, that wraps up my quick version of the Market Synergy Group product portfolio. But again, what I will add is please contact any of your marketers at IAMS. Laura, Scott, Matt, all of them have my direct line cell phone number. If you want to have one-off conversations, I would be happy to do so. Again, thank you for your time. We look forward to working with you. If there's any questions, Laura, that you had pop up, I'd certainly be happy to answer them. Or if you want to have each of the individuals that are on the line call in with questions, we can do that as well.
Yeah, it doesn't look like I've got any questions, and I'll actually follow up with each of you guys individually later today or first thing tomorrow to go over kind of what Jared talked about and answer any questions. So if you guys do have any questions, I'll be reaching out to you soon. But I really appreciate you taking out your time, and really appreciate you, Jared, coming to join us.
Thank you, Laura.
Have a good day, everyone. Bye.